Welcome to Closing Trades right here on ET Now with me, Aisha Faridi, Ajay Sharma as well in the studio. And what a recovery in the market. I mean, to think of it, we were languishing below that 19,300 print, and then came the news of Reliance Jio Financial Services shares getting listed on Monday, and the kind of trajectory or the orbit is that Reliance is now sitting on, that's clearly pulled the markets higher. So we're back at that 19,350 level in trade, and the single-handed contribution coming in from Reliance Industries alone, which is rubbing off on the Nifty. Because if you were to look, sans RIL, not much is actually holding out in the green. IT sector for surely is underperforming for a consecutive week. TCS, Wipro, Infosys, TechM, these are all some of the biggest large cap losers today. But yes, Reliance, as we speak, is holding up very, very smartly in trade, as is the Adani group of names as well. So look at Adani Enterprises, Adani Power. In fact, the combined total market capitalization of the Adani 10 Adani listed stocks is up by about $4.5 billion, and it's the maximum market cap that they have seen in appreciation since that Feb 1st decline in the Adani group of names back when the Hindenburg news was at its peak performance. And it's interesting to see that our markets are recovering, I mean, thanks to only RIL actually, because the global market sentiment is surely beleaguered. Beat Asia because of the Japan inflation numbers, Evergrande wars, they continue. Asia has had a weak close for itself, and even Europe is starting off on a very, very weak footing. So clearly, we are the world outperformers, so to speak, as of now. And one stock can do it alone.
Yeah, well, it triggered the short covering.
Yes.
But if you look at the composition of the market, it is not only RIL which is leading the index. Auto stocks have come back very smartly. Some of the banks like Axis Bank has come back. Look at Eicher, Maruti and Tata Motors. All three are gaining very smartly in trade. So the trigger definitely was RIL. But it appeared that people were just sitting on the edge and covered positions. So all of these stocks are also back to days high. Banking is also getting a lot of help from private sector banks like Axis Bank and few others. SBI too is doing well. But Nooresh and Kunal are both here to help us identify specific trading ideas and what to make of the trade so far. Kunal, I'll start with you. Today was the fifth time in the last 3 months that we went dangerously close to 19,200. But rebound. Is this support which you've taken around that point? Because you told us in the morning 19,300 closing needs to be protected. It appears that that's been protected. So will it be seen as a sign of strength? Would you carry your long positions?
Well, yeah, I would say it's a sign of strength. But on the other hand, I think I'm not sure whether consistent attempt towards this 90,200 to 50 mark would eventually lead to a breakdown. So I've been maintaining the stance since the last few days that we'll have to wait out for a confirmation of a close below 90,300 mark to actually initiate a fresh short. Other than that, you can just sit out on the index trends, because there's so much of opportunity on the stock specific front, which one could probably try and trade with in this kind of a listless market. As such, Bank Nifty, I think Bank Nifty today has seen a good jump. Reliance is one of the major contributors for that. So we can just expect that this move trickles into the other large cap stocks on a relative price gain rather than just a recovery from an intraday sell-off.
Nooresh, you've had quite the conviction on RIL, right? Pretty much along this week, it's been one of your picks on a daily basis. What do you now read on the charts now that we're back above 2550 thereabouts, 2570 actually right now?
So getting into a very important resistance zone. If we look at the highs before the Jio listing and merger were to be done, the high was 2850, and given 250 rupees for Jio, 2600 becomes the adjusted price. And once we sustain about 2600, that would be a multi-year high. That would be the high which was made in the last 3 years. So at 2570, 2600, 2650 is a resistance. But if it can cross, then it becomes a multi-year high, and which actually makes Reliance Industries the leading stock in the index as well. And what is missing in the current market conditions for the indexes, there has been no leading stock. We have the heavyweights only drifting. You have the whole IT sector drifting lower. You have HDFC Bank, Kotak Bank, and all the other names are drifting lower. So if this breakout happens beyond 2600, 2650, so my target is 2600, 2650 for the short term. But if we sustain above that, that makes Reliance Industries a clear-cut leader, and that could surprise on the upside. So for now, one could shift their stop losses to 2520 and ride on to Reliance.
That's RIL in trade for you in focus. Jio Financial Services is going to list on August 21st on BSE. That's coming Monday, and that's clearly keeping the stock buoyant in trade. Aside of that, there's also GMM Pfaudler. It's up a good 10% from the session lows. Pfaudler Inc., remember, has exited the company, and Chris Capital, as we understand, has acquired a near 10% stake in GMM Pfaudler. That's recovered lost ground now, sitting at 1500 plus levels. The South Indian Bank as well, the RBI nod to appoint PR Seshadri as the MD and CEO with effect from October 1st for a term of 3 years. That's auguring well for the sentiment on this stock. South Indian Bank will just come up for you on your screens. That also is going very, very smart in today's trading session. There you go, up a good 8% on the back of very big volumes. That's the move on South Indian Bank. It was a gap up move to start off trade with, and it's only managed to build on from there. There's, of course, Manappuram Finance as well, which is actually seeing the steepest decline in about 3 months. It's had a block deal earlier today, and that stock is still under pressure, down about almost 4% as we speak. Yatharth Hospital, relatively new listing. It's posted its Q1 numbers, and it's seen the highest year-on-year growth rates in the hospital industry by far. That stock has gapped up 9% and still going very, very strong on the back of decent volumes as well, albeit. HOEC, though, that's one stock which is under pressure today. Untimely information on the field shutdown, lower production from Duroc, the consistent change in the BAT outlook, that's clearly not auguring well for the sentiment on HOEC, which is now down almost 13%, over 8 million shares traded on this stock already. But back to Jio and back to RIL, which is clearly the big star performer. Let me, in fact, take it across to Somit and try and understand how the listing is going to go about and what does it really mean for RIL shareholders. Somit?
Well, Reliance Industries demerged entity Jio Financial will be listing on the stock exchanges on August 21st. Now, the discovered base price of Jio Financial was 261.85, and at this price, if you see the market capitalization of Jio Financial on listing would be close to 1.66 lakh crore rupees. Now, at 1.66 lakh crore rupees, Jio Financial would be the 9th largest financial institution, listed financial institution in India. Now, Jio Financial will remain a part of Nifty 50 and Sensex for the next 3 trading days and will be removed from both the indices on Thursday. That will be the 4th trading day. Now, because of this removal from the indices, there could be some passive outflows because there are some funds that have been passively tracking both Nifty and Sensex, and as the stock would be removed from the index, there could be some amount of outflows owing to this front. Now, on Nifty, what brokerages are expecting is there could be around 90 million shares of outflow, which is equivalent to close to $290 million US, and on Sensex, around 55 million shares outflow could be expected, which is close to $175 million US of selling. That is expected when it comes to Jio Financial, because it will be removed out of Nifty and Sensex from Thursday. Now, what do we know about Jio Financial? It has been led by ex-ICICI Bank veterans, that is KV Kamath and Hitesh Sethia, and this business will be, and Jio Financial will be getting into the lending service business to consumers, merchants, and they're also looking to get into insurance payments, digital broking, asset management as well. Now, they also aim to build in strategic financial partners going ahead. Now, if you see along with this, Jio Financial is expected to have a AAA credit rating, which will lead to lower cost of funding for the company, which would be an upper hand for Jio Financial in the NBFC market, and it has a very large distribution footprint already settled. It has more than Reliance has more than 18,000 Reliance retail store where they could cross-sell Jio Financial product. It has more than 78 crore footfall on an annual basis in its retail stores, and also it has nearly 43 crore telecom users to whom also it could cross-sell Jio Financial products. So keep an eye out for Jio Financial and Reliance Industries in trade. Jio Financial is expected to list on August 21st, and right after a week, Reliance Industries AGM is also going to be held on August 28th.
Right. Okay, Somit, we leave it at that. RIL clearly the star performer today. Let me also welcome on board Pankaj Murarka. Pankaj, hi, afternoon. Good to have you on the show. Let's start by talking about RIL, Pankaj, because the last big move came the day the demerger news was announced of Jio Financial Services. Since then, we've not really seen much of an excitement in RIL, right? And of course, the market also has, eased off. But now that Monday you'll have the listing of Jio Financial Services on the bourses, wanted to understand whether the street will now, look at it as a precursor to other demergers, perhaps retail and then Jio?
Good afternoon, Aisha. Definitely, I think so. Meaning, I think it's a matter of time. All of those in terms of retail and other demergers might not be imminent. It might take a while, but I certainly think over a 3 to 5 year period, all of those should play out. Talking about Reliance, I think we need to put things in perspective now. It's a pretty large conglomerate at close to $300 billion of market cap. On their size and scale, to move the needle, they need to do projects which are like more like $10-20 billion at least, to say the least, to really have an impact on financials and move the needle on balance sheet of Reliance. So, and I think given the way Reliance has been for all these years that I have seen in my investing years, they take big, large, bold bets. And then it takes a while for those really bets to culminate and really translate in terms of numbers and shareholder value creation, which we have seen in the last 5-7 years in terms of what has happened with telecom. Likewise, I would think within financials, given the fact that India's financial services sector is a pretty sunrise sector, it's a pretty young industry and the potential is huge. I'm sure they have significant plans. And over the next 10 years, I'll not be surprised if they are amongst the leading financial players across different segments or verticals of financials when it comes to Jio Financials.
One quick follow-up on that. I know you have Reliance in your portfolio, and the recent notes seem to be suggesting that the street is kind of working with numbers of doubling the profitability in next 3 years. But what about the valuation of Jio Financials? Even if it lists around 300, what the grey market seem to be suggesting, it would be 2.5 times, 3 times price to book. So what do you have to say about the valuation? Does it become a buy at that level? Would you like to see a roadmap offered by the management maybe at 28th on the AGM, right, 1 week later, before buying? Or how should we analyze our decision making whether to buy Jio Financial at that valuation?
Well, I think there'll be some degree of euphoria initially on the listing day or a few days post-listing, and that should settle down over a period of time in the next, let's say, few weeks, let's say next 4 to 6 weeks of trading, where some of those stock might move from weaker hands to much more stronger hands, and there'll be an impact of Jio Financial moving out of index. So a lot of index funds might be selling during that period of time. That aside, I think from our point of view, Ajay, we are more value investors. We like to buy businesses at reasonable price and valuations. So from our point of view, we'll still wait for a while before we buy into Jio Financials. But having said that, yes, given the fact that all those businesses that they intend to build are at incipient stage, but I think they'll scale rapidly. But yes, the current valuation that is being talked about or what is being projected or estimated, I think that factors in a fair degree of very strong execution over medium term, which I would like to give them a benefit of doubt given the kind of management pedigree and given the kind of operating management team that they've built. I think they should be able to execute. But the current valuations to begin with do building some expectations out of very strong execution over the next 3 to 5 years.
Stay on with us. Lots more to talk about with you, but after this very quick break.